Hello and good day, ladies and gentlemen. You're with Martin Penniff, Chief Account Executive and Trading Analyst, GDMFX. Welcome to today's European markets outlook. Starting with North American markets, as usual, yesterday the Dow Industrial Index didn't move much, sideways movement yesterday. However, the high-tech NASDAQ did around 65 points down yesterday. The Dixie Index is also slightly down. Yesterday, durable goods orders came out worse than expected. Both readings, S&P Schiller Home Price Indexes year-on-year 0.1% worse than expected, 5.4. Market Services PMI also worse than expected. Composite higher than previous, though. Consumer confidence weaker than the expectations by 1.8 points. Yesterday, the Bank of Canada governor had a speech. He is recommending pension funds to get ready for a new normal neutral interest rates, lower than they were before the financial crisis. Polish told Wall Street audience on Tuesday that the fate of neutral rates, the levels he said will prevail once world economy recovers, remain unknown, but they will almost certainly be lower than previously thought. The central banker made the comment during a question and answer period, which followed his speech on global trade growth. He also said that moving its benchmark interest rates below zero is something in the Bank of Canada's monetary policy toolkit, which the bank may consider down the line. There is a departure from 2009 when the bank said its theoretical lowest possible interest rate was 0.25%, because to go lower would have been incompatible with the certain financial markets, such as money market funds. The statement, basically, the focus on this event will be on the speculation surrounding a June hike. They also expect them to talk about inflation and the likelihood of gradual increase. Yesterday, the US dollar versus the loonie went 65 pips down. Today, we have the federal interest rate decision and also monetary policy statement. We also have a few reports with low volatility expected. These are the pending home sales month-on-month and year-on-year, and also a few Tier 3 reports. Moving to European markets, DAX 30 yesterday opened with a down gap, and it ended down with 32 points total. The French CAC 40 is also down with almost 10 points. Something interesting, Australia has chosen France to build a new fleet of submarines, turning down Japanese and German bids. It is being described as one of the world's most lucrative defense contracts, worth the equivalent of 34 billion euros. Defense Minister Jean-Yves Le Drian said on Tuesday that the contract will create thousands of jobs in France, mainly in Brittany, where the shipyards are located. Yesterday, big movements on the euro versus the Japanese yen, 50 pips versus the dollar 32. The Aussie went up with 24 pips. Euro pound down with 27, and Euro Canadian dollar down with 36 pips. Today, the reports from Germany already came out. Import price index, month-on-month, year-on-year. We also have the GDMFX consumer confidence survey for the month of May, and one event from the Switzerland, the UBS consumption indicator for the month of March. Moving to the British markets, the FTSE 100 gained 17 points yesterday, closed at 6,242. 10-year gilt yields closed at 1.48% yesterday. Yesterday, we had mortgage approvals reports, which misses the projections and previous reports at 45,000. Yesterday, the cable did 88 pips up from 160 pips range. It's going pretty much sideways up till an hour ago, versus the yen 105 from 225 pips range, versus the Aussie 30 pips up yesterday from over 300 pips range, 290 pips up today already, versus the loonie, a big range, almost 150 pips. and versus the Kiwi 185 pips range, 70 pips movement down. Versus the Swiss franc, 65 pips up yesterday, 105 pips range. It's going pretty much sideways. As I said today, preliminary gross domestic product quarter-on-quarter, year-on-year, consumer confidence reports, and mortgage approvals. We also have the index of services, nationwide house price month-on-month and year-on-year, and net lending to individuals, along with the M4 money supply. This would be month-on-month and year-on-year as well. Asian Pacific markets, yesterday Nikkei 225 did 350 points range, ended on a dodgy 160 down already today. Today's inflation reports from Japan are pouring in, along with unemployment rate for March, jobs and job applicants ratio, household spending, which is predicted to be lower, industrial production preliminary month-on-month and year-on-year, foreign investments, and retail sales reports. A few hours later, in the beginning of the Asian session, the Bank of Japan will have interest rate decision, monetary policy statement as well. For the Pacific front, yesterday, the AUD print out negative CPI reports. The results were huge. The Aussie suffered all over the charts. All of our traders, which we managed to get in touch with yesterday to take a closer look at the Aussie, I think we're quite happy today. We also had reports from New Zealand, which misses the expectations, and this is also coming up not very good for the currency. Next up, we have the RMB set to announce their interest rate decision during the wee hours of tomorrow's Asian session. There has been some talk of a possible interest rate cut from 2.25 to 2% from this particular meeting, but we need to remember that they've just lowered rates in their March statement. So let's think of it a little bit deeper. Why they might cut or stay dovish? The RBNZ officials don't seem to be too happy about the Kiwi's appreciation, blaming this for downward pressures on domestic inflation, and also pointing out that a decline would be appropriate. At that time, the New Zealand dollar versus the US dollar has also been trading around 0.6800 levels. The employment situation is pretty downbeat, as the headline figures mask the underlying weakness of labor force participation. The participation rate has been dropping for 3 consecutive quarters and has reached its lowest level since the third quarter in 2013 at 68.4%. Why they might be less dovish? Well, the freshest batch of reports from New Zealand suggests that the economy could eventually turn a corner, as the global dairy trade auctions this month yielded decent gains in dairy prices, 2.1% and 3.8% was the report. In addition, the CPI reading for the first quarter turned out better than the expectations, with 0.2% increase in price levels versus the projected 0.1% uptick and previous 0.5% drop. Businesses have stayed optimistic while trade activity has picked up, and also exports jumped by almost 6% in January and resulted to New Zealand's first trade surplus in 7 months. This also marks the 5th consecutive monthly improvement in the trade balance, buoyed by 25% increase in exports to China and 11% rise in shipments to Australia. Moving to the commodity sector, yesterday the S&P 500 index had a range of 13 points. Currently the price is 20.80. Oil rose to $45 a barrel, headed for the highest price gain since November last year on a massive buy-off. We would expect the orders to be closed and the price to start going down, as it broke all resistance levels, and there is currently no fundamentals to support prices, but right on the contrary, for the prices to go a little bit on a passive. Gold prices ranged $13 yesterday and kept prices a bit higher than the opening. The bulls are still in control there. The crude oil stock change report is due today. That was pretty much all from me. Thank you very much for your attention. I wish you a successful trading day. Cheers. Bye-bye.